Welcome back to another edition of By the Numbers, where we take a deep dive into market affordability. We show you real properties and give you real solutions. Today, we're going to be looking at a property found on Zillow. It's not even listed yet. It actually comes on the market tomorrow, Friday the 10th. So keep a lookout for that. Today, we're visiting 2912 Crestline Avenue in Raleigh, North Carolina. 27603. List price of $330,000. Right below the picture, you can see the link to Zillow to find it, and it's also going to be in the description below. This listing is provided by Casey Proctor from Dash, Carolina. So let's take a look at some numbers here. We're going to be breaking it down by full asking price if we were to have a $15,000 price reduction, and then seller concessions, using the seller concessions to buy down the interest rate. And we'll break down each one of them by conventional, FHA, and VA. So let's start here by full asking price. So the criteria that I used is a 740 credit score, 5% down for the conventional, 3.5% down for FHA, and nothing down for VA. We also used the market rate at about 5 p.m. on Thursday. So this is not a first-time home buyer, so I did not use that criteria. It is 5% for conventional, 3.5 minimum for FHA, and no minimum requirement for VA. So let's break it down for you. So at an asking price of $330,000, putting down 5%, you're looking at a loan amount of $313,500. We are going with a 30-year fixed rate mortgage, and that rate, when I priced it, was 6.875, which is interesting because earlier this morning the rate was at 7.125. So you can see it's going to adjust by the market. So it's good to get your information up to date. So moving right along. So again, 30-year fixed rate mortgage, 6.875. Your down payment on this particular property would be $16,500 for 5% down. And again, it is a fixed rate. Your FHA loan came in at $318,450. 30-year fixed rate came in at 6.25%, and your down payment amount is $11,550. Failed to mention on the conventional loan, it does require mortgage insurance, and that one came in at $172. Your FHA mortgage insurance is at $146. And last but not least, your VA loan, $330,000 purchase price, 30-year fixed rate came in at 6.625%. Again, no down payment requirement, and they also do not require mortgage insurance. So what does a payment look like for these numbers? Your conventional loan, we're going to break it down by your principal, interest, taxes, and insurance, also known as your PITA. Sometimes if you are putting less than 20% down, you will be required to have mortgage insurance. So that is an extra criteria on top of this. So I'm just going to break it down for each one. Your principal for conventional loan is $369. Interest comes in at $1,691. Your homeowner's insurance and your PMI is $268, and taxes $242, giving you a grand total for $2,569 per month using a conventional loan. Moving on to your FHA, $411 towards your principal, $1,550 in interest, $242 for the homeowner's insurance and PMI, and $242 for taxes, giving you a grand total of $2,445. And last but not least, your VA loan comes in at $403 going towards your principal, $1,710 going towards interest, $96 towards that homeowner's insurance, and $242 for taxes, giving you a total for the month of $2,451. All right, so what if we were to ask the seller to reduce their price by $15,000? Let's see what that does to these loans. All right, so new loan amount comes in at $299,250. 30-year fixed rate mortgage is the same at 6.875. Your down payment goes to $15,750, and your mortgage insurance is at $165. Moving on to your FHA, $303,975. For your loan amount, 30-year fixed rate came in at 6.25%, $11,025 for your down payment, and $139 for mortgage insurance. And lastly, your VA loan comes in at $315 for your purchase price. 30-year fixed rate came in at 6.25%, and $0 for your down payment, and no mortgage insurance. All right. So let's see what a payment would look like using $15,000 reduction. Your conventional came in at $352 going towards your principal, $1,614 going towards interest, $257 for PMI, $231 for taxes, giving you a grand total of $2,454 per month. Your FHA is going to be $392 a month in principal, $1,480 for interest, $231 for both your homeowners insurance, PMI, and taxes, giving you a grand total of $2,334 per month. And lastly, your VA loan, $385 towards your principal, $1,632 a month in interest, $92 for that homeowner's insurance, and $231 for taxes, giving you a grand total here of $2,340 for your monthly mortgage. Now, our final one using seller concessions, we're going to break that down. Seller concessions we will use to buy down your interest rate. So taking a look, going back to the original purchase price of list price of $330,000, 5% down, your loan amount will be $313,500. 30-year fixed rate mortgage came in at 5.875, spending $9,013 in points, or 2.875. Down payment back to that $16,500. $172 for the mortgage insurance. Moving on to the FHA loan, $318,450 for the loan amount. 30-year fixed rate came in at 5.5%, $11,550 for your down payment, and $146 a month for that mortgage insurance. Your rate buy down cost was $8,003, and the points were 2.513. And lastly, your VA loan, $330,000 for your purchase price. 30-year fixed rate came in at 5.5%, paying a total of 2.731 in points, or $9,012. Now let's see what this does for your payment. All right, for your conventional loan, we have $426 going towards your principal, $1,428 going towards interest, $268 for your PMI homeowners insurance, $242 for taxes, giving you a grand total of $2,364 per month. Now your FHA loan comes in at $457 going towards your principal, $1,352 for interest, $242 for PMI homeowners insurance, and $242 for taxes, giving you a grand total of $2,292 as a monthly payment. And lastly, your VA loan, $473 going towards your principal, $1,401 going towards interest, $96 for homeowners insurance, and $242 for taxes, giving you a grand total of $2,212 as a monthly payment. Now, that was a lot of numbers just to throw at you, so we're going to look at them by side comparison so you can really see the value. Starting off with your conventional loan, we're going to look at full asking price, no savings. Your monthly payment will be $2,569. Now, if we use that $15K reduction, asking the seller to reduce that purchase price by $15K, your payment would have been $2,454, giving you a savings of $115 a month, asking for a $15K reduction in price. And then moving on to those seller concessions, using it to buy down your interest rate. Initial payment would have been $2,569. New payment would have been $2,364, giving you a savings of $205 a month using seller concessions to buy down your interest rate for a conventional loan. So you can see the big winner here is the seller-funded buy down. Buying down that rate saves you the most at $205 a month. All right, moving on to an FHA loan. Full asking yet again, no savings. Monthly payment would be $2,569. If we were to ask for $15K reduction in the sales price, your Monthly payment will be $23.34. If you subtract that original price of $25.69, you're going to get a savings of $235 a month, asking for a reduction of $15,000. Now, if we ask for the seller to give us concessions instead, and we use that money to buy down your interest rate, you would be saving $277 a month. So, slight savings is savings, right? So it might not be huge amount, but it's definitely enough to make a difference, especially when you're talking about monthly payments over the course of 30 years. And then last but not least, let's take a look at our VA loan. Full asking, no savings, monthly payment at $25.69. 15K reduction, your monthly payment will be $23.40, giving you a savings of $229 a month for that 15K reduction. And then if we ask the seller for concessions versus a reduction, your payment difference would be $357 a month. All right. So in conclusion, my vote is for seller concessions. If you look at the math, it just adds up. Just because you get a reduction in the price, if you look at how the numbers break down, it's not always what it seems. Using seller concessions to your advantage, buying down the interest rate in this high interest rate market, is going to benefit you in the long run. Let's take this buyer's market, let it work for you, buy down the rate, get you the house that you want. Take care. And for all you agents and loan officers out there, check out our agent growth classes. We have classes such as ChatGPT and AI for your real estate business, Instagram Reels, hooks and scripts, embracing the shift, all these to help you grow in 2023 and beyond. If you're not interested in any of those courses, check out this section. This is our education courses. We have things such as seller-funded buy-downs, how to use gift funds to sell more properties, credit issues, facts versus fiction, and then things like simplifying condo financing. If any of these ring a bell, go ahead and scan that QR code to the left side of your screen and set something up.